has come to my attention that Uncle Jerome doesn't control the only money printer in the world. Another ETF is just printing free money, more than the Federal Reserve according to some YouTubers. AMZY AMZY is the Amazon Option Income Strategy ETF by YieldMax. Now, I haven't always been the biggest YieldMax fan, but AMZY, boy oh boy, they sure are changing that because they are one of the better performing YieldMax ETFs. The fund is up over 13% since its inception in July of 2023, and they've paid some mouth-watering, juicy dividends. This has now led to some YouTubers taking a mortgage against their house to harvest the value of this money printer that is AMZY. Let's consider if putting all your money into one single stock ETF and then taking a loan against your house, if that's a good idea. Or will it leave you sleeping in the streets? Yes, guys, we've reached that point of the simulation, that point of YouTube, where we are now considering if taking a loan against your house to buy more shares of a relatively brand new ETF that is involved in a risky strategy is a good idea. Now, one company that's absolutely amazing is Amazon, the actual company. This is a fantastic company. They brought in $143 billion in revenue in their most recent quarter. This is spread out across several different geographical locations, and they have a trailing 12-month free cash flow number of over $50 billion. Amazon is one of the most profitable businesses in the world, and it's for good reason. Amazon makes a ton of money when it revolutionized online sales. It makes a ton of money from people advertising on its platform to get the top spots on search results. It has reoccurring revenues and Prime membership fees. It keeps people coming on back for more and more, and people would be shocked to learn how much money Amazon actually makes from Amazon Web Services. This is a cloud computing platform that's used across several different industries. Amazon is a $2 trillion market cap company, and their investors have been rewarded quite well. In fact, since July of 2023, Amazon is up over 46% in capital gains at the time of this recording. Amazon, of course, doesn't pay dividends, but if we reinvested the dividends, bro, with AMZY over that same time span, we'd actually be beating Amazon, the company, by 2%. But notice the key word I said there. Reinvest the dividends, bro. If we didn't reinvest the dividends, bro, if we actually wanted to live off dividends, we'd be trailing Amazon by 4%. Now, over long periods of time, this is actually more and more transparent because AMZY, they trade at a lofty 99 basis points expense ratio. Let's be clear, this expense ratio is paid by you regardless if the fund actually makes money or not. Also, dividends are generally taxable. Uncle Sam is stealing our gains. Uncle Sam is reclaiming his money printer. It's almost like if we were really bullish on Amazon, it's just much easier to buy shares of Amazon ourselves and just hold on to them for the long term. Another important factor to note that is Amazon has done very well since AMZY has been out, but it's not always going to be sunshine and rainbows. Between November of 2021 and December of 2022, Amazon lost over 54% of its value. That is hundreds of billions of dollars in market cap lost. Imagine waking up and losing half the value of your portfolio. But Uncle Cody, we can just hold on to our shares of the money printer AMZY. We believe in Amazon. Well, not so fast. As clearly stated on AMZY's YieldMax website, in huge letters, the fund is subject to all losses, all potential losses if Amazon shares decrease in value, which may not be offset by the income received by the fund. This fund might not be suitable for all investors. Investing in the fund involves a high degree of risk. Let me repeat that to you guys. They're subject to all the losses when Amazon the stock goes down, but only some of the upside when the fund goes up. This is because of all the options trading the fund does to generate those juicy dividends. Now, does that sound like a winning formula to you in the long run? Stocks don't always just go up, they also come down. So many of you have only been investing in a bull market, you really need a bear market to humble yourselves. Over the long run, notice how I keep saying that phrase, over the long run. I'm not talking about any Christian McCaffrey right here. I'm talking about over a long period of time. This will likely cause the NAV to erode. This means the fund has less and less money to do options on, and thus those dividends will go down. We can already see this in motion with a fund that is crashing and burning, not literally of course, in Tesla, which is down 63% in the 18 months it's been out. And sure, Tesla has paid some juicy dividends, but you will notice the dividend they pay has been going down consistently. What started out as an adjusted $2 dividend per share is now down to just 70 cents, which directly correlates with the decline in share price. Will AMZY follow the same pattern? Nobody knows for sure, but if Amazon does inevitably decline at some point, I wouldn't be surprised. It's almost as if nothing in life is free, especially money. It's almost as if there's a direct correlation between risk and reward. But no. Certain YouTube channels will say, if you believe in Amazon or if you believe in Tesla hard enough, the share price will somehow magically go up. Guys, do me a favor. Go tell your kids that you believe in them. That will probably actually do something. Companies like Amazon and Tesla, they're driven by future cash flows, financial performance, and what value the company will actually provide. That's it. It doesn't matter if you believe in them. Anyone who says dividends are free money, that's usually a surefire way to know they have no idea what they're talking about. There's always going to be some sort of inherent risk. Nothing is free. Just because AMZY has paid out dividends in the past, that means absolutely nothing in terms of if they will pay dividends in the future. Dividends are not guaranteed. Amazon has a lot of sturdy boxes. AMZY investors may need to call it their future home. Why would you risk your home for a risky investment, not guaranteed cash flows, having to pay interest on the loan, big expense ratios, taxes? The list just keeps going on. If you believe in Amazon, just go buy the stock outright. It's that simple. It's not a money printer. There's no shortcuts in life to being rich. There's no Lambo. There's no sandwiches. You're not smarter than the professionals on Wall Street that do this for a living. You're not going to retire off a $100,000 portfolio. You're not going to get $10,000 in monthly cash flow from a $100,000 portfolio, despite what some certain YouTubers say. Just remember this in life, guys. It is easier to fool people than convince them they have been fooled. The vast majority of you need to go watch Warren Buffett, go watch Peter Lynch speak. 99% of us are just better off buying the index because you won't beat the market over the long run. The truth really does hurt, and I know I might be coming off a little brash, but losing money, that hurts way more.